Hello, everyone. Felipe here. Happy Monday. Hope everyone had an awesome weekend. So, as you know, I'm here to keep you up to date with current market news and teachings. This is in no way, shape, or form financial or investment advice. This is for educational purposes only. So, I'll go ahead and jump into what I'm currently seeing in the markets. So, I keep running into these risk arbitrage scenarios. Another one I've come across is in the biotech industry. Seems like a lot of ththese biotech companies are acquiring one another recently or in recent times. So this is Merck's Co. Inc. They basically announced, I believe, in April 15th that they are going to acquire Prometheus for $10.8 billion, which is approximately, well, it's $200 a share. Currently, the share price for Prometheus is trading near that range. I'm assuming the market believes this is going to close. However, it is supposedly not going to close until some point in the third quarter of this year. So that gives a potential for fluctuation in the price from here to then, in the case of possibility that some regulator attempts to block the acquisition. So, according to the analysts that wrote this report here, Merck and Co. is going to acquire Prometheus Biosciences Inc. And this would be a good strategic move for Merck's, because it would allow them to diversify the current drugs that Merck's and Co.'s sells, which it seems they have over reliance on the cancer drug known or called Keytruda. And so Prometheus, which is they have certain drugs under development. And one of them drugs are focused on autoimmune treatments such as PRA023. That is one of the drugs that Prometheus currently has in stage 3 trial, which is the stage before it actually becomes commercialized and then potentially being able to be sold out to the market, right? So PRA023, a treatment under development for illnesses such as ulcerative colitis and Crohn's disease. So Merck's, given that Keytruda is expected to account for more than 45% of total revenue by 2025, so it's one of the drugs that Merck's and Co. Makes the most money off of selling. They're saying that basically the acquisition would give them diversity in terms of what they can offer, in terms of the drugs they have currently in their portfolio. So the deal is a potential positive strategic thing for this company in order to diversify Merck's drug portfolio from its highest selling drug, which is Keytruda, which is for cancer treatment. So Prometheus had a market cap of about 5.42 billion as of recent time. Its stock is up a lot this year, and its stock went up a lot after that specific drug, PRA023, advanced to phase 3 clinical trials in December. That news caused the stock apparently to rally 70% and go up a lot. Typically, when these biotech companies announce things like that, the stock just goes up a lot. So PRA023 is an antibody that binds TL1A, a target associated with both intestinal inflammation, and fibrosis. Phase 2 studies have demonstrated the best-in-class potential for the drug, which is potentially disruptor in the inflammatory and immunology space, and has a pipeline that stretches beyond inflammatory bowel disease, or IBD, which is the abbreviation for that. They wrote, IBD is the umbrella term used to describe disease including Crohn's and ulcerative colitis, both of which cause chronic inflammation of the gastrointestinal tract, leading to diarrhea, rectal bleeding, abdominal pain, fatigue, and weight loss. So Prometheus basically advised, according recently to the phase 3 trial of this drug, doesn't mean it's going to be commercialized, but it means it's one step closer to being commercialized. And I'll show the danger in the case that it doesn't become commercialized, because these biotech companies typically run at a loss because they're producing these drugs and so forth, and they require a lot of research and development investments. So the article goes into, they're not anticipating any major antitrust issues to arise, given that the deal is Merck's first foray into the immune meditated space, while other big drug companies, including Bristol Myers, Squibb, AbbVie Inc., Pfizer Inc., and Johnson & Johnson all have meaningful exposures to IBD. But Merck & Co. is one of the big biotech companies as well. So PRA023 is a potential game changer that could break through the efficacy ceiling that has plagued the IBD space for years. Prometheus gets global infrastructure from resources of big pharma company to help push through phase 3. So before Prometheus can actually sell this PRA023 drug, they have to complete phase 3. It's very dangerous in the case that they don't, because the stock price will completely plummet. And I'll give you an idea of what that looks like. So here we have Kodak Sciences Inc. Before one of their drugs that was on phase 3 ended up not passing through phase 3, caused the stock to just crash pretty nasty. Prior to that, it was selling at like $128, and then it just dropped down to basically single digits, $7 and so forth. So that just gives you an idea of the shock that, and how volatile and risky these biotech companies can be if those drugs don't push through their phases, right? Because that basically means the company that is already running at a loss is not going to make money anytime soon. So this is just some more information on it. So Merck will pay $200 a share for Prometheus, PRA023 being developed to treat 2 inflammatory bowel diseases. I mentioned that already, but they advise that could be a multi-billion-dollar seller for Merck. Counter bid is slim, as other large drug makers already have a meaningful exposure to IBD or immunology, and Merck represents the cleanest acquire from the antitrust perspective. So basically, less likely that a regulator will block this bid because Merck doesn't have any kind of competitive advantage in the IBD drug space as of yet. Doesn't mean anything. It's just according to whoever wrote this article. They can be outbid. Pfizer seems to be like to outbid other biotech companies that attempt to acquire other biotech companies. So that is also a possibility. So Merck has acquired a game-changing asset in PRA-023, which is a drug, if the deal closes in the third quarter of this year. So this is not going to close, if it is, until the third quarter this year. The market is basically pricing it as if it's most likely gonna close, but any a block by a regulator will kind of shock the stock price and bring it down, which that's something to kind of see and weigh, because it is not going to close like that soon, right? There's still some time before this closes. So let's see what we have here. So Merck was reportedly in talks to buy cancer-focused biotech Seagen Inc. This is the company that rival Pfizer ended up bidding Merck. And it seems like Pfizer is now going to acquire Seagen Inc. So that just basically brings into perspective that there's a possibility that some other biotech company can place a higher bid for Prometheus. So here we have Prometheus is basically almost trading near the acquisition price. That is pretty crazy. So it seems like the market believes this thing is like a done deal. It's going to close. But I am just watching it to see if a regulator does attempt to block this acquisition, because that's going to shock the stock price and potentially bring it down for a potential arbitrage opportunity, because this is not supposed to close until third quarter, right? So there's still some time before that actually occurs. So here we have Prometheus financials. So the quarterly report in this case, the more recent one, Prometheus Biosciences Inc. So let's see what's up with this. So again, just by looking at the balance sheets and income statements of these biotech companies, they most of the time run on a loss, because they're producing these drugs that are not even being commercialized yet, and a lot of times they're not being sold on the market. So they're not making any money. They're just producing these drugs that are on trial. And then when they do go into the market and they are commercialized, in the case that they pass phase 3 trials, then they can begin selling them and making money off of them. So here we have March 31st, 2023 compared to December 31st, 2022. Cash and cash equivalents have dropped a bit. Total current assets are up. Total assets are up slightly. Total current liabilities are down a bit. Not bad on that. Total liabilities are down a bit as well. So you can do some formulas here to find certain ratios. For example, net working capital would be total assets minus liabilities. Total current assets minus total current liabilities. But here we have what I keep noticing in all these biotech companies that don't have any specific commercialized drugs they're selling on the market. They tend to run at a loss. So as of from its inception, this company has surmounted a $371 million loss. Round that up to $372 million loss, which you can see over here. Accumulated deficit 371,969, and this is in thousands. You can kind of see over here in thousands. So $372 million deficit. So they're basically don't make any money. Research and development. This is basically majority of where the money for these biotech companies go in terms of paying salaries, medical equipment, and anything they need to be able to produce these drugs, right? So net loss 40,876,000, higher than year before. So yeah, basically this Prometheus Biosciences Inc. runs operates at a loss, like many of these biotech companies. That's why they're so risky. Let's see what we got going on here. Net loss, same. Anything that stands out. Basically just a huge decrease in cash and cash equivalents. So their cash at hand is down. One thing I noticed, let me see here. They seem to be good at investing the company's capital in terms of investing activities, as you can see here, and they're conservative in the terms of how they invest the money to get interest off of it, whatever cash equivalents they have at hand, right? Which typically is on from what I saw, treasuries and safer investments like bonds and so forth. I'll point it out, but I spot it. So Prometheus Biosciences was incorporated in the state of Delaware on October 26, 2016, under the name Precision IBD Inc. and its headquarters in San Diego, California. The company changed its name to Prometheus Biosciences Inc. on October 1st, 2019. The company business is focused on the discovery, development, and commercialization of novel therapeutic and diagnostic products for the treatment of immune mediated diseases, starting first with inflammatory bowel disease, IBD, liquidity. So here they're basically right off the bat saying that they don't make any money. The company has incurred net losses since inception, experienced negative cash flow from operations as of March 31st, 2023, and has accumulated a deficit of $372 million. The company has historically financed its operations primarily through private placements of convertible preferred stock. Private placements are basically stock sales to accredited investors. Proceeds from the company IPO in March 2022 and proceeds from the sale of its common stock through a public offering and an at-the-market offering. So they basically are letting you know, hey, we don't make any money, which a lot of these biotech companies don't. That's what makes them so risky. So let me just skip through some of this stuff. Research and development, very important for these businesses or companies, because their drugs being pushed through the phases depends on a majority research and development. So skip here. Let's see if I find anything interesting that I kind of pointed out. So yeah, marketable securities, cash and cash equivalent, money market funds, commercial paper. Commercial paper is basically, these are very liquid, cash-like things. That's where cash and cash equivalents come from. Short-term investments, commercial paper, corporate debt securities, U.S. government and agency securities. So their investment operations are very safe, and they seem to do well in terms of their investment operations. See here. So prepaid expenses and other current assets, clinical trial expenses, somewhat up from last year. Contract manufacturing expenses, research and development expenses up from last year, which is expected with these biotech companies, considering that's basically what they do. Okay, let's see. skim through some of this stuff. Public offering. When this company IPO'd, I believe it sold for like $17 a share. It's crazy now. There's $198 a share, and it IPO'd not too long ago. That's a serious upside with this company. Crazy how volatile these biotech companies are. So here we have the basically acquisition agreement. On April 15th, 2023, the company entered into an agreement and plan merger with Merck & Co. Inc. Merck, though, through the merger sub, will acquire all outstanding shares of Prometheus with the total equity value of the transaction estimated to be approximately $8.8 billion. So these are basically the stipulations to the contract, the expiration or termination of the required waiting period applicable to the consumption of the merger under the Hart-Scott-Rodino Antitrust Improvement Act of 1976. So that's one of the acts that basically oversee these mergers, acquisitions, and whether they get approved and so forth, as amended, as well as other required waivers, approvals, and waiting periods under certain other specified antitrust laws having been obtained, terminated, or expired. And the absence of any injunction, order, or decree by any court of competent jurisdiction preventing the consummation of the merger, and any law or order that prohibits or makes illegal the consummation of the merger. So basically any regulators that might prevent this merger from occurring. Let's see here. So owned by company stockholders who are entitled to demand and have properly a validity demanded their appraisal rights under Delaware law will be canceled and extinguished and automatically converted into the right to receive $200 a share in cash without interest and subject to any applicable withholding taxes. So, and this is written into the merger contract. If the merger agreement is terminated under specified circumstances, the company will be required to pay Merck a termination fee of $325 million. So it seems like Merck really wants this merger to close. They basically have it written into contract that if Prometheus Biosciences decides to cancel the agreement, they have to pay Merck $325 million. The merger agreement also provides that in connection with termination of the merger agreement under specified circumstances, including antitrust-related circumstances, Merck will be required to pay the company a reverse termination fee of $650 million. So it goes the other way around as well. The transaction is expected to close in the third quarter of 2023, assuming satisfaction of waiver of all conditions of the merger. So there's still some time before this closes. Okay, so this is some information on the drugs basically that Prometheus has in development and so forth. So here they state their lead candidate, PRA023, is a humanized IgG1 monoclonal antibody that has been shown to block the tumor necrosis factor TNF like ligands 1A, TL1A, a target associated with both intestinal inflammation and fibrosis. PRA023's dual mechanism of action targeting both inflammation and fibrosis also provides a strong rationale for advancing PRA 023 into clinical trials for indications beyond IBD. This is another drug they have, Artemis UC, which is in phase 2, randomized placebo-controlled clinical trial of PRA 023 in patients with moderate to severe ulcerative colitis and Apollo CD, a global phase 2 open label clinical trial in patients with moderate to severe Crohn's disease, each utilizing our genetic base diagnostic candidates designed to identify patients who are predisposed to increase expression of TL1A and therefore potentially more likely to respond to PRA 023. So they have a couple of other additional drugs in production: Prometheus UC, Apollo CD, and PRA 023, which is the one that seems to be in phase 3. The other two seems to be in phase 2, which is the phase before phase 3. So we plan to advance PRA 23 into pivotal phase 3 clinical trials for UC and CD in 2033 after we finalize our phase 3 clinical trial strategy. So yeah, this goes a little bit into what they have going on in terms of their drugs. So we haven't incurred, and here they're just stating that they're running at an operating loss. So yeah, this is so at initial public offering, the Prometheus shares were $19 a share. Currently they're almost $200, I guess, because the market is basically pretty confident that this merger agreement is going to close. But it's something I'd watch, considering a regulator attempts to block, or some kind of news comes up and creates a drop in the stock, and potentially considering that this might potentially close if one believes, creates an opportunity for a risk arbitrage, right? So yeah, that is some cool stuff in the biotech industry. So I like kind of going into stuff because learning a little bit more about biotech companies, more than I had before, to say the least. So cool. I'll leave you guys with a market quote. This is a good one. I like this one. Since buying what the crowd spurns and selling what the crowd craves is the essence of the master investor's art, it follows that he must be serenely able to do the opposite of the herd, even though the herd instinct is the strongest human emotion. And that is by Robert Wilson. Cool. Awesome. So yeah, with that being said, thank you guys for watching. I hope I shared some cool stuff with you guys. Hit me with a like and subscribe. I would appreciate that. Thank you guys for your time, and I'll talk to you guys soon. Have a good one.